Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer, and it's a good day for the Nifty just ahead of Diwali. But we have a packed show today, Vivek.
Packed show. So let's start off with the top headlines. All key indices trade with near 1% gain as stocks recover after the sharp decline on Friday. Midcap index up 600 points. Realty, metals, and financials are the big gainers.
Orient Electric is locked in upper circuit on the back of strong Q2 performance. Revenue growth driven by good performance in the lighting and appliances segments, while gross margins also expanded by 200 basis points.
Voltam Transformers nosedives in trade as a subdued performance in Q2 weighs on the stock. Management guides for a healthy order pipeline, but is cautious on supply chain and competition.
Interglobe Aviation shares down in trade on the back of weak second quarter numbers. The company reports its first loss in 7 quarters. Higher maintenance and fuel costs take a toll.
Multi-quarter weak performance continues in Q2 for Chintan Pharma. Revenue and EBITDA under pressure, while margin declines by 500 basis points. Stock hit a fresh 52-week low level.
Okay, so it's one of those days where we are seeing a bounce back, and it's not a small one. It's a 250-point uptick on the Nifty, very close to the day's high. We did see some fall, a minute fall from the highs, but nothing to complain about after the brutal sell-off that we saw last week. Mid-caps are participating, and the bigger participation is coming in from Nifty Bank. So Nifty Bank is the one which is up 630 points. PSU Banking Index lending support. We have a lot of earnings that came in over the weekend from the banking pack. And there's one more where Indian Bank has seen a sharp spike. That stock is up 6%. The net profit is up 36%. So we are seeing a lot of contribution coming in from Bank Nifty today.
You're right, and it's especially the PSU basket that's seen quite a bit of a bounce back. Indian Bank strong set looks also that provisions actually, when the rest of the lenders are seeing quite a bit of a spike, both sequentially as well as year on year, it seems to have contracted. On the back of that, Indian Bank up almost 6%. But Hormaz is standing by the wall. This is our special segment, Midcap Movers. Hormaz has all of the top stocks in the broader end of the markets that are moving around in the session.
It's a welcome green after all the brutal sell-off that we have seen over that entire last week, and it is being led by banks. Indian Bank was one of them that has come out with results just now, but some of the other banks that reported results over the weekend and on Friday as well. Bank of Baroda, Bandhan Bank, Yes Bank is slightly off the highs of the day but still holding on to gains of 7.5%, and Bandhan Bank now at the high point of the day almost up 10%. Some other positive earnings reactions that have come in, some of them were reported very recently. Motilal Oswal numbers came out very recently, up 9%. Ambuja's numbers came out recently, are up 4.5%. Cartrade Tech 2, the spike that you see on your screen is after the results were out, 6.5% higher. And CDSL, another positive earnings reaction. Some negative earnings reactions led by Interglobe Aviation, a couple of stocks that you highlighted as well, including Chintan Pharma, Chola Investment, and Credit Access Grameen. Also after the downgrade that it has received, 4.5% lower, but off the lows of the day. Stocks doing well on the back of volumes. And Archean Chemicals is up 15%. Poonawalla FinCorp, after the drubbing that it saw on Friday, is seeing a bit of a rebound. Maharashtra Seamless and Amara Raja is up 8% on very strong volumes. A sector that is doing very well other than PSU banks is pharma, and Laurus Labs continues to defy gravity after another strong result performance on Friday, another 5.5% in today's session. Biocon, Natco Pharma, and Granules 2 within the pharma pack having a very good day.
Okay, all right. Thank you so much for joining us with that list as always, Hormaz. So some parts of the market cheering the earnings or the management commentary that has come back. Let's move on to a CNBC-TV18 exclusive now. The RBI Governor, Shaktikanta Das, has been ranked as the top central banker by US-based Global Finance magazine. My colleague Malvika Jain met with him in Washington, D.C., and the governor sounded optimistic on growth. He said while the festive season demand paints a mixed picture, the economy is doing well, with positives outweighing the negatives. The governor is also confident of rural demand revival on the back of a good rabi crop.
You see, I don't want to, I'm not in the game of one-upmanship.
Sure.
But last year, in all seriousness, when we projected higher growth, I think the opinion outside was that RBI was being too optimistic. But ultimately, the growth number which came was even higher than what we had projected. Today, as I'm talking to you, in all seriousness, you see, there are some mixed signals. The festival season, the first quarter, the growth rate was lower than what we had expected. Second quarter numbers will come only at the end of November. Second quarter also, there was some unseasonal rains in the month of August, etc. some activities got affected. But even in the festive season, there is some narrative that perhaps the sales figures and certain things have slowed down. But what I would like to emphasize is that there are mixed signals. There are pluses, there are some positives, there are some negatives. But I think the positives significantly outweigh the negatives. The so-called, I'll just complete, the so-called slowdown in certain areas, that has been significant, that is getting, that is outweighed by the kind of positives that we are getting. And if I can just take half a minute more, you see, agriculture sector is doing exceedingly well this year thanks to a very good monsoon. The expectation on Rabi crop is very good. Rural demand has now revived. That is one area which was languishing for a long time. Even the first quarter GDP number this year at 6.7, which was lower than our estimate of 7.1. Even there, the consumption demand has shown significant revival. I think if I remember correctly, it was about 7.4 or 7.5, something in that region.
Another thing that you talked about and is obviously at the top of RBI's agenda is inflation control. You've indicated time and again that until and unless we see inflation in the round over 4% region, a rate cut is completely ruled out. If we continue to see growth, as you are expecting that the momentum will continue, so do we assume that rate cuts would not happen?
Inflation management, price stability is our primary responsibility, keeping in mind the objective of growth. At the moment, as we stated in the last monetary policy statement, as I have said, the growth and inflation component of our mandates are well balanced, they are well poised. So therefore, we changed our stance to neutral. Now we have flexibility. We have now flexibility to watch the incoming trends and to sort of assess the evolving outlook and decide on what policy we will take. Now, growth is doing well.
And you can hear views from the RBI governor on the different aspects of macros and moderating inflation, but the risks around it on the domestic economy doing well and positives significantly outweighing the negatives when it comes to festive season demand. Catch excerpts from the exclusive interview all day today only on CNBC-TV18.
Let's now slip into a short break. On the other side, Amit Kumar Sinha, Managing Director and CEO at Mahindra Life Spaces, will be with us to discuss their Q2 earnings. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. The stock on our radar is Mahindra Life Spaces. There was an operationally weak quarter. Bookings declined sequentially and on a YOY basis. If we look at the numbers, the booking number has seen a decline of 61% sequentially, 12.5% on a YOY basis to come in at around 400 crore rupees. But the long-term targets remain intact for the company. We have Amit Kumar Sinha, the Managing Director and CEO at the company, joining in now to take a few questions. Mr. Sinha, good afternoon. Thank you for joining in. Well, first, what explains the decline that we've seen in the bookings on a sequential and on a YOY basis? And for the rest of the fiscal, what kind of quarterly run rate are you looking at? Almost 1,400 crore rupees in the first half. Is 3,000 crore rupees on the cards in FY25?
Yeah, thank you for having me. I think let me just answer your questions quickly. First part, if you look at the quarterly seasonality in the business, quarter two tends to be much lower. So a sequential quarter may not be the best way to look at the market in terms of the sales number. But you combine first quarter and second quarter, as you said, H1 for this financial year is almost 80% higher than the last financial year H1. So we had a tremendous growth that we saw in the H1 period between the two. Quarter two, seasonality, rains, there are Shraddh and many other religious reasons why people tend to not buy, and that's an industry-specific phenomenon. But going forward, we have a lot of exciting launches planned in quarter three, quarter four, which tends to be, from a seasonality and from a purchase decision point to be very healthy season. And we had a similar performance last financial year. We hope to actually continue the momentum that we have seen on the first half with a similarly exciting set of launches in Mumbai, Pune, Bangalore, even Jaipur, which will help us make a very exciting close to the financial year in H2.
Mr. Sinha, when you're talking about the bookings, both year-on-year sequentially, like you mentioned, there's been a bit of a dip. Now, you've given us a very strong guidance in terms of the development value, the GDV, you're seeing it at over 45,000 crore. You've also given a guidance in terms of the achievable cash flows at over 6,000 crore rupees. By when and how will you be able to achieve this, especially given that there have been a few execution delays you've faced in some of the projects?
Yeah, so let me just highlight, I think you touched upon a very important point, Vivek, about the cash flow. This is a business where cash flows are extremely important. And just for reference, this financial year, H1, our cash flows more than doubled. So we had roughly 550 crores of cash flows, free cash flows in H1 compared to half the number in the last financial year for the same H1 period. So it's a very healthy cash flow. And this cash flow will get deployed in buying land or doing joint development agreements for our future GDVs. Of the 45,000 crore that you see I've given in terms of what we need to achieve, half of that we already have in our portfolio. Roughly 20,000 is we already have. Thane being a big part of that story, and hopefully approval process, etc., are very time consuming in Thane, Mumbai. But I think we have a very healthy pipeline of GDV already. With the cash flow that we will have this financial year, as well as some of the equity and platform partnerships that we are looking at, a very healthy debt to equity ratio, a very strong industrial business that generates a lot of cash flows for us, and we have a strong, probably the largest business that we have in the industrial side. These things will help us adjust the cash flow required for us to achieve our 45,000 aspiration. So we are on track. I don't see any major issues in terms of us achieving our long-term aspiration.
Mr. Sinha, you do have a 7,000 crore funding plan. By when do you have that plan? Will it be via the QIP route, or will you also look at tapping markets for debt? What is the current absolute debt number?
So this is 5-year plan. So when we launched this, our strategy focus on key segments, key market, we also did a financial analysis and what kind of aspirations we have. So 8 to 10,000 crore is our aspiration. That was 5 times our 2023 numbers. That's what we are planning for. And the avenues that you talked about in terms of funding, all the things that you mentioned are absolutely true. We're looking at everything. We have a strong cash flow from our internal accruals, and many launches that have done really well for us in the first half will give us a lot of cash flow. We will also have, as I mentioned, we already have a very healthy debt to equity. So we have the opportunity to push that. We'll still be very conservative given our group heritage and philosophy. We will also be doing equity partnerships, and those platform partnerships are underway in terms of discussion, negotiation. Hopefully, we'll close them in the next few days. So all of these will contribute to the cash requirement that's needed to achieve our aspirations.
Okay, thank you so much for joining us. Thank you so much for throwing light on the numbers and the way forward. Let's now slip into a short break. Up next, we will connect with Sanjeev Goenka, Chairman at FirstSource Solutions, to discuss their Q2 numbers. Stay tuned. Welcome back to Mid-Cap Radar. Well, FirstSource Solutions is the next management on our show. We have Sanjeev Goenka, Chairman of FirstSource Solutions, with us. Good afternoon, Mr. Goenka. Thank you so much for joining us. It appears to be a very strong quarter, and you've also raised the full year guidance. Take us through the highlights of the quarter, and where is it that you're seeing visibility that you've managed to go ahead and raise the revenue guidance by such a large margin?
So this quarter itself has been a very, very good quarter where revenues have grown by 22.7% and stand at 1925 crores compared to 1791. And in constant currency terms, it's about 6.6% above quarter on quarter, 22.7% over last year, same quarter. So that's a very good thing. It's for the company. This quarter, we had 3 large wins. And the coming quarter, we expect to have at least 3, if not more than 3 large wins. A lot of action has been going on in terms of increasing our revenues and focusing on margins. So the revenue piece is beginning to fall into place. The margins will still take some time, even though there is a 0.2% improvement in margins from the same period last year. But I think there is still a lot of work to be done there. 13 new clients were added in this quarter, which is, again, the best that we've done in a long time. So we won a deal with Telestra, we won a deal with Fulton Mortgage, we won a deal with Nationwide Building Society. These are the 3 large deals that we won. With the Sensex acquisition, our South Africa operations seem to be growing very fast. And we've got 1 large contract already post the acquisition. We expect to get at least 1 more very soon. And so it's actually the fact that we are getting new clients, new logos into our portfolio, and our ability to expand our wallet share with existing clients that is giving us this confidence.
Okay. We get that, and the street likes your confidence as well, and the guidance that you've raised. The stock is higher by 7%. But Mr. Goenka, I wanted to understand what is the reason for lowering the upper end of the margin guidance. Earlier, you were expecting 11 to 12%. Now it's 11 to 11.5%. Are there some short-term issues that the company is looking at? Can you explain why this lowering of the guidance?
So there are 2 factors. We've invested heavily in SG&A. And as you are aware that by the time these resources start generating revenues, there is a 2 to 3 quarter lag. Okay. So the investment has happened. We've invested in our operations in Mexico. We've invested in the acquisition of Sensex. So by the time we start seeing the results from our investments in SG&A plus our acquisitions, you will see a time lag of 2 quarters probably. And that's why we've said it's better to be real. And I think thereafter, hopefully, we should see a better movement.
Mr. Goenka, you mentioned 2 things. You highlighted quite a few deals that you are likely to win in Q3 and Q4. You also said you're seeing rising wallet share. Which sectors are you generally seeing, the positive momentum coming in from? And also, you briefly touched upon the Sensex, acquisition as well. Give us your targets over there.
So I think our wallet share is increasing, in fact, with clients across in healthcare, in media, in banking, across the sector. And we've been working very consciously at this. And I had talked about this when I had spoken to you all several months ago, that this is something that we are going to focus on. And this seems to be beginning to pay results. I do expect this to have greater impact as we go on in the future. But so far, it's been very positive as well. And Sensex is something that has... So it gives us complementarity in terms of logos. So they have a very interesting portfolio of retail logos, for example, John Lewis and a few others. They have very strong operations in South Africa. And a lot of our existing clients are very happy shifting the onshore work to offshore at South Africa. And so this, over a long term, will give us enhanced margins, will give our customers a better value for money as well.
Okay. So, Mr. Goenka, what does it do to your long-term guidance? You had a guidance of $1 billion of exit rate by FY26, margins of 14 to 15% over the next 3 to 4 years. Would you upgrade that as well?
For the moment, we leave it there. But all I can say is I'm optimistic about our revenue growth. I think to get up to margins of 14 to 15%, we have some work to do. We are very confident of what we will do and how we will get there, but we still have that work to do. So revenues is growing already faster than we anticipated. Margins growing at the pace that we anticipated.
Mr. Goenka, quick question. What are the margin levers? You said that margins, work on margins is still a work in progress. What are the margin levers? What kind of headwinds are you seeing to margins growing at the same pace as revenue? And the second part of the question is, how do you see the impact of Gen AI as far as FSL is concerned?
So Gen AI is something, again, that we are really looking at very aggressively. And we do believe this is the way, and this is one of the pivots on which the company can grow stronger with higher margins going forward. And you will see more and more of Gen AI being used. We had hinted at one of our clients, one of the majors, using AI for and outsourcing some work to us. But that's just about the beginning. But yes, this is a major focus area. This is something that we will focus a lot of growth on. And it's something that evolves every day. The nature of Gen AI changes literally on a day-to-day basis. And this is something that we want to focus on, as I said, and we will grow.
Okay, all right, Mr. Goenka, always a pleasure speaking with you. We would like to chat a little bit more, but completely out of time. But the stock is high by 7% and the street seems to like the upgraded guidance and the commentary as well. Thank you so much for joining in today. Okay, that's all we have on Midcap Radar, but a mega CNBC TV18 exclusive. The RBI governor speaks to CNBC TV18. The conversation coming up next.